let's talk about my next potential income investment strategy because back in May 2025, I actually added a new asset which is known as the LionGlobal Short Duration Bond Fund Class A SGD accumulating. The reason why I added this fund back then was because of the lower interest rate environment and it's still decreasing right now. So we are seeing like T-bills, SSBs, and even fixed deposits all lowering their returns. But I still wanted an asset with good returns, something different from equities and high interest savings accounts, which could still give me a decent yield. In fact, when I checked the past 1 year's performance of this fund, it actually returned more than 5% per annum based on the past results. And here's the good news because Lion Global Investors is going to launch this bond fund as an active ETF on SGX this coming September 2025. If you are new to bonds, think of them as loans that you give to companies or government, and in return, they pay you regular interest and return your money at maturity. It is a way to earn regular income without the wild swings of the stock market. But you see, the challenge of investing in an individual bond is that they usually require a minimum investment of 250,000 Singapore dollars. And that is on a per bond basis, making them difficult for retail investments to enter the bond market. In contrast, bond funds allow investors to gain exposure to a diversified portfolio of more than 200 bonds with a much smaller investment size. This will help to spread out the risk, gives you professional management, and can provide regular income through interest payments. Now, I'm going to use an analogy to explain short duration versus long duration bonds. And to help with the illustration, I'll compare between Sentosa and a Europe trip. Because when you think about bonds like planning a trip, short duration bond is like a weekend getaway trip to Sentosa. It will mature between 1 to 3 years. The bond prices move less when interest rates change, and it's really great for capital preservation. But when you look at long duration bonds, it's like traveling all over Europe. A long duration means these bonds mature in 10 years or more. Bond prices will swing more with interest rates, and it's more for investors who are willing to accept more volatility. So for this Lion Global short duration bond fund, it stays firmly within the Sentosa territory with shorter maturity, lower volatility, and more stability, which is exactly what I like as it is part of my fixed income allocation. Now let's take a deeper look on what this bond fund exactly invests in. This is an actively managed short duration bond fund investing mainly in investment grade bonds. And the following numbers are accurate as of 31st July 2025. The weighted average yield to maturity is 3.18%. Weighted average duration is 2.25 years. Countries diversification wise, it diversifies globally with a strong Singapore allocation of around 40%. Sector-wise, it is mainly in financials, real estate, and sovereign bonds. And the aim of this fund is to have a total return of capital growth and income over the medium to long term, while having a management fee of 0.25% per annum, which is relatively competitive for an actively managed bond ETF. And lastly, it follows a quarterly distribution policy for now. Now, all types of investments comes with their own form of risk, and Lion Global Short Duration Bond Fund ETF is no exception to this. So let's address all these risks one by one, starting from number one, the currency risk. Because when we talk about foreign currency denominated bonds, they usually come with exchange rate fluctuations, which means your returns will be impacted when you convert from the foreign currency back to your home currency, which is SGD. But for this ETF, it actively hedges the currency exposure with 99.7% of the portfolio in SGD, helping to minimize FX related volatility. Secondly, let's talk about the interest rate risk because as you know, bond price decreases as interest rates rise, especially for longer duration bonds that will have an even greater impact. This fund keeps its average duration short at 2.25 years, reducing sensitivity to rate changes, and that is a strategy that requires close monitoring of market conditions. Lastly, let's talk about default risk because there's always a chance that the bond issuer may fail to repay their loan. To mitigate this, the investment team conducts ongoing credit analysis and invests mainly in investment-grade bonds with selective exposure to high-yielding names where appropriate. All in all, these risks are really complex and require time, expertise, and real-time data to manage them effectively. As such, an active bond ETF helps investors navigate this risk with professional oversight and discipline, all in one single product. I'm going to use another analogy to explain what is the difference between a unit trust and an ETF. And this time, the illustration is going to be a travel agency versus an online travel agent. Because let's put it this way, when you're buying a unit trust, it's like booking your travels through a physical travel agency. You place your order and your price is fixed at the end of the day. But buying an ETF is like booking travels through the online travel agents. You can see real-time prices and execute your buy or sell orders during the active trading hours. So this one is an active ETF, which is the best of both worlds because you get the professional management of a unit trust and the flexibility and transparency of an ETF. Now coming to the most important question of today's video, how to buy, and here are some important dates that you should take note of. The initial offer period or IOP is going to start from 8 to 23rd September 2025. You may subscribe for this ETF using cash via participating dealers like OCBC Securities, Philips Securities, iFAST FSM1, DBS Vickers, or Maybank Securities. It is also available for subscription via OCBC ATM, internet banking, and mobile banking. And from 29th September 2025, you can buy it on SGX just like any stock or ETF using your cash or your SRS. And here are the applicable ticker codes and Bloomberg codes, so make sure you get it for the correct currency below. And there's going to be a limited time and limited quantity promotion starting with FSM1. Get 10 Singapore dollars for every 10,000 Singapore dollars invested, and the cap is at 200 Singapore dollars. Both cash and SRS subscriptions are eligible. Do take note of the terms and conditions. Secondly, Poems by Philip Capital also has their own promotion where you can get 10 Singapore dollars for every 5,000 Singapore dollars invested, capped at 500 Singapore dollars per client. But this is only limited to the first 200 eligible clients, so make sure you refer to the official terms and conditions. Also, if you're new to either FSM1 or Poems, do check out the link in description to get your new user welcome rewards as a new sign up. So maybe let me share personally why I like the LionGlobal short duration bond fund product. Firstly, it is short duration, which means lower interest rate sensitivity and volatility, and it gives quite an attractive yield for a defensive asset class. It's actively managed to pick quality bonds and optimize income, and it's now even available as an ETF, making it more accessible where you can start ordering from 1 Singapore dollars per unit. For me, it just ticks the boxes of triple A's: attractive, active, accessible. So it is definitely part of my broader strategy to diversify away from equities while keeping my capital working. And since this is an investment related video, I have to put out some disclaimers right here. This video is for educational purposes only and it's not financial advice, and all investment carry risk because past performance is not the guarantee of future results. Make sure you always do your own research or speak to a licensed financial advisor before investing. And if it was not clear enough, this is a collaboration between Honey Money SG and LionGlobal investors. But all opinions are of my own since I invested in this product before I was even approached by LionGlobal investors. So all in all, if you're looking for a regular income generating investment options with lower volatility than equities, then you can look at this LionGlobal Short Duration Bond Fund Active ETF. Remember to check out the links in description for the fund details and the participating dealers, and of course all the promotions that you will enjoy within the limited time and limited quantity. And if you want to check out a previous video I did on the LionGlobal Short Duration Bond Fund, then I can refer you to a past video right here.